What is going on, everybody? Welcome back to Trading Learning 101. This is episode 6 of the weekend stock market recap, where we go over the stock market indexes and the sectors. We're going over the week of May 25th through the 28th. We're ending a month, starting up a new month. So whenever we end a month and go into a new month, the first week of the market, I always want to try to observe and see if there's any algorithms that are changing, any patterns that are changing. Really just observing to see if anything is changing. This past week for the overall market was really red. We've seen the market drop below a level. We're going to cover it. We got a lot of stuff to talk about in this. And just to go over a couple things real quick, the stock market sectors and the index, I'm going to try to combine it all into one video because it's just too much putting out two separate videos every weekend going over the indexes and the sectors. From here going forward, I'm going to try to put it all in one video for you guys. And maybe I'll do a live stream of it every weekend, or maybe I'll just record it and put it out. We'll see how it goes. But just to get something out of the way real quick, we are approaching the 1-year anniversary of me joining YouTube and live streaming and putting these videos out. My 1-year anniversary is June 25th of 2018. I have been trading now for over 3 years. So the first 2 years, I learned how to trade in the markets, and then going into my 3rd year, I thought I'd start a YouTube page. I don't know what I'm going to do yet for the anniversary of the YouTube. Maybe I'll do a giveaway or a special video. Leave comments down below if you guys have any recommendations or anything you'd want me to do. I was thinking about doing a video on the statistics on how many subscribers I've grown, how many videos I've put out, and maybe reflecting on my first year on YouTube. So just leave comments and let me know what you guys think or any recommendations on what you guys would want me to do. And then real quick, NASDAQ.com updated their website. So I just had it up. It logged me out of it. 1 second, let me log back into it. NASDAQ.com, I always use this website for stuff. It's always filled with great information. I'll get to see IPOs that are up and coming. Let's see. Looks like there's some stuff going on with it. Let me try to update it. Disconnected session. Well, they updated it and I wanted to show it to you guys, but it just crashed. So bear with me here. Hopefully you guys are all having a great weekend. Alright, well, let's jump into this recap. First up here we're going to go over is the VIX. Last week we had a little bit of a short trading week with Memorial Day on Monday. Market reopened back up on Tuesday. The VIX here, the past 4 days, has been really above 16, this level right here. You could see it bounced right off that 200-day moving average and then perked right back up. It's still below 20 right now, but if this VIX gets above 20, then I'm really going to be looking for market plays, playing the TVIX UVXY. And here's the TVIX or VIX right here the past 5 days. Let's go to the 3-minute and look at that. The past 4 days, you could see here, starting on Tuesday, it was right at 16 right here. Moves up Tuesday up to 17, almost 18. went sideways, got a pull back down, and then Friday gapped up to almost 20 and was able to just settle down Friday back to this 18 level, and it closed right here at 19. So it's going to be key to see where the VIX opens on Monday. Monday, if it's opening above 20 and is showing strength, I'm going to be looking at the TVIX and UVXY, like I said. With it getting over that 20 mark, let's move over to the SPY real quick. The SPY starting the week. Last week I said 280, 281 is going to be a key level of support on this. I was looking for it to be bullish, to bounce off this 280 level and keep going to the upside. But then when Trump put tariffs on Mexico, that's when we got this gap down Tuesday below this 280 level. Made a new low here at 277. Then you see it worked its way back on up. Old support is now resistance. You can see how it almost touched right here. Came back down, made a new low at 275 right here. And I was saying Friday, this 275 level has to hold. If it doesn't hold this 275, this market is just going to keep going down and down. A lot of people are saying we're entering into a recession. We could be selling off in the markets. If Trump keeps tweeting and putting tariffs on all these big countries, the market could keep going down and down. It seems like every time the trade wars or these tariffs are brought up, the market just gets real choppy and doesn't like that. Let's look at the daily. Here's the daily on the SPY. You can see we topped out here at 295, came right down to this 280 level right here. Got a nice bounce off that 280 level, and it was topping out at 290. And when it came right back down before last week began, I said, look for the market to get a bounce off this 280 level and start working its way back on up to 290. But then Tuesday, we got that gap down below 280, so we had to rework our plan, because you always want to react to the market. Market gaps down below this 280 level, so I was looking for 280 to hold as resistance now. Comes down. The SPY here has been bouncing right off of the 300-day moving average, this 275 level. If it breaks below this 275 level, look for it to keep going down to 270. I'd be looking for 270 to hold, and we can also slap on Fibonacci retracements on this. Put the Fibonacci retracements from the swing low here at the beginning of 2019 all the way up to the swing high of the all-time new high that we hit. It's going to come right down to this 38.2 level. So 271 it's looking like. And if it breaks below that 271, look for 265 next. It's like every 5 points down. This is like to work around. But going into next week, we may see a bounce to the upside, or we could just keep selling off. That's why I'm saying keep an eye on the VIX. If the VIX gets above 20 and keeps climbing, I'm going to be looking at the TVIX. Real quickly, let's look at the Dow Jones. The Dow Jones blew through its 300-day moving average. And the Dow Jones could get a bounce here at 24,400. It's not really looking good, really. I want to say I'm bearish going into next week. Let's look at the Qs real quick. The Qs is looking like it's wanting to bounce here at the 200-day moving average. This 275 level is an important level for it. If it can't hold this 275 level, look for 170 for the next level on the Qs. Go to the NASDAQ 100 real quick. Just looking at this, you could just see it's just trending down right here. So slap on some trend lines connecting the lower highs and the lower lows and just follow the trend until the trend is broken. This is still looking like it's got more room to go down. The NASDAQ 100 is right at a good place where the 300 and the 200-day moving averages. Maybe we can get a bounce off this level, but if it blows through this, look for it to keep selling down all the way down to 7,000. Looking at the TVIX too. See how the TVIX here on the daily has like that rounding bottom. That's a bullish sign. So I'm going to say I'm bearish going into next week. The markets are probably going to continue to sell off. The fear gauge is probably going to keep going up and up. So it's going to be good opportunities for the inverse ETFs. Definitely keep a close eye on the markets going into next week. United States gas hitting new lows. Natural gas, the past 4 days, it was hanging on to this 22 level right here. Got a bounce up to 22. But then after that, with these 3 big red candles here, it's dropping down to 21. So be careful. It could be like catching a falling knife. Take a look at the semiconductors real quick. Semiconductors, it looks like it's trying to stabilize right here at this 97 to 100 area. We could draw a line right here. See how it's just selling off and trending down, making lower lows each time. Real quickly, the past 4 days right here, it's went sideways from 98 up to 100. So keep an eye on this range for it to bounce in this range. Hopefully we can get a break a break to the upside from this range, or it could continue to keep consolidating at this range. But if it breaks from this range to the downside, look for selling in the markets. We're like on the verge, really on the verge. We don't know which way the market wants to go yet. And then let's look at United States oil. United States oil's in a free fall as well. Looking at that on the daily. It was in a range here from $12.50 to $12. You can see that big candle right there surges through the range and just keeps falling down to 11. So look for United States oil to get a bounce here at 11, or it could keep falling. But I am liking this 11 area for a potential good bounce. You could see right here was resistance at one time. It was liking to sit in this area right here. So let's see if 11 can hold on United States oil. And if it can't hold 11, look for this thing to, it's got quite a ways to drop if it breaks through 11. $10. Mental area might be the next level for it. But if it gets a bounce to the upside, look for $12 to be resistance. Next up, we got gold. Gold with a great rebound. Look at just this selling down right here on gold. Gold just kept getting pounded and pounded and pounded, just trending down and down and down from this 14 all the way down to 1150. And then look at just that big gap up right there to 12. Gets a nice run up to 1250. Very nice on gold this past week. Friday was its big day right there, as you can see. Tuesday, just sitting there. Wednesday, just sitting there. And then Thursday, just sitting there. And then boom. Let's look at that real quick. So you can see it just kept trending down right here. And then it put its bottom in right here and went sideways. Got that great gap up and off she went to the upside. Very nice rebound play on gold. Alright, let's cover the sectors real quick. All the sectors ended the week last week red. The worst was energy, consumer staples, and financials. The top best that performed last week, even though they are red, is real estate, information technology, and materials. All of them pretty much closing at the lower end of its range, besides real estate, closing at the midway point of its range. Alright, let's real quickly go over these sectors. First one up, we got energy. Energy's still in its free fall from where it was in this range right here. Broke from the bottom side of that range and just keeps dropping and dropping. Currently at 58. Be careful with energy as it's in a free fall right now. This thing could keep dropping. The technology sector slapped some trend lines on it connecting the lower highs and the lower lows right here. It's tough to say. I do like the level where it's at, trying to bounce off the 72, 71 area. Really, I think it's got room to come down to 70. We're just going to have to see how it goes this upcoming week. Communication, same thing. Just it's in a free fall right here. Connecting the lower highs and the lower lows. You can see it just trended down, got a bounce, and it's trending down more, making a lower low. I still think it's got room to keep falling. Next, we got financials. Financials trending down as well. We got the 300-day cross. Looks like it's trying to cross below the 50-day. it's not. A lot of this stuff is just in free fall mode right now, so it could get bloody going into next week. Consumer staples, same thing, in a free fall. Look at that big surge down right there to the 50-day, gap down below the 50-day. The 50-day was resistance, gaps down more and keeps falling. This has room to keep dropping all the way down to the 200-day moving average. It could get a bounce right here. I'm super, super bearish going into next week for sure. Super, super bearish. I don't think I'm going to be aggressive going into next week. We're falling below all of our moving averages. We're entering into bear territory. We're making new lows. I think volatility is going to pick up for sure. Even looking at industrials making new lows on the daily. Consumer discretionary trying to get a bounce here at 110. This might get a good bounce off 110. Up a little bit, but for now everything's just making lower lows and lower highs. It could be like catching a falling knife. And same thing with materials. Was in a really, really tight wedge right here, and it just broke below that wedge. Looking at healthcare. Healthcare is trying to hang on to this 86, 87 level. If it can't hold this 86 level right here, look for this to drop down to 85, down to healthcare is just looking really choppy. It's trying to bounce right here at 87. If it breaks below 87, look for 86 right here. Next up, utilities. Utilities got a big, big landslide after hitting all-time new highs starting Monday from 60, sells all the way down to 59, continues to sell down and is trying to go sideways here right where the 50-day moving average is at 58. We could see a bounce to the upside with this consolidation here, or it could follow like what every other sector is doing and just keep falling and making new lows. You really just got to take it day by day. And then we got real estate here, recently hit all-time new highs. After it hit all-time new highs here at 37, we get a pullback, nice pullback down to the trend line we have here connecting the higher lows. So real estate is still looking bullish. Look for this 36 level to hold on real estate, and as it continues to make higher lows, the trend's not broken. And that's it on all the sectors. Majority of the sectors are looking bullish. The only one, or bearish, the only ones that I'm seeing that look bullish are real estate, maybe utilities for a nice bounce off that 58 level. Other than that, everything else is looking bearish. I think the TVIX is going to be a nice play next week. I really do. Up to this 30 level. Here's the TVIX the past 4 days. The beginning of the week it was at 2175. Ending the week hitting highs before the market opened at 2650. So a nice $5 range on the TVIX right now. But you just see how choppy it's been lately, up and down. All right here, right here, all right here. Very, very choppy on the TVIX. In a way, it's like it doesn't know which way it wants to go. It's being pulled back and forth very aggressively. Rips to the downside up, and then choppiness going into the close Friday. But I love playing the TVIX. A couple things I wanted to go over. We have a couple new IPOs opening up this week on Thursday and Friday. So here on Thursday, we got GSX opening, and they're pricing it at $9.50 to $11.50. And then Friday, we got RVLV opening at a range of $16 to $18. So it's the year of the IPOs. IPOs have been hot this year in 2019. Definitely keeping these two stocks on my watch list for the end of the week. Maybe a potential play. And then the following week, we got CRWD opening. Go to the earnings calendar real quick. We got around 121 stocks reporting earnings next week. Here's the earnings calendar. Here are all the companies reporting on Monday. All the companies reporting on Tuesday. Wednesday, big list of companies coming out with earnings. Same thing Thursday. And then no one reporting on Friday. So Wednesday and Thursday are going to be big days for earnings. And then we also have a couple splits coming up as well. DP or DWDP, a 1-for-3 reverse split. FFIN, a 2-for-1 reverse split. AIRT, so just a couple key things. This is what I do every single weekend. I try to go through and prepare for the upcoming week. So I got my, let me show you guys. For Thursday and Friday, I got my two IPOs that are being released so I don't forget, and I also write it down. And then I go through and I'll go through to see if any companies are coming out with reverse splits, because we all know, even from last year, these stocks that have been having reverse splits have been having big moves. So we got a couple here. A recent one was VLRX. VLRX came out with a 1-for-20 reverse split here on the 20th of May. at $5.50. It sold all the way down to $2, and then from $2 had an explosion up to $4. Look at this on the 15-minute. Look at that. That's a great move right there. And I remember when this gapped up here and had that 6-6 sell-off, and then it continued to sell all the way off, and then look at, sold all the way down, and then continued to sell all the way down, and then bottomed right here at $2. Started getting momentum, pops to the upside right here, got really tight, and then boom, off it went. Have to observe and watch these stocks. This is all opportunity right here. VLRX is still in play up to this 450 level. It's currently below $4. If this can get back above 4, I'd be looking at this for a potential 450. But if it breaks below 350, it's done for. So its current range is from 350 to 4, and from 4 to 450. Also keeping on watch, I got a big watch list. I already made my weekly watch. I got SOLY on watch. I like this pattern it's setting up right here. I don't think SOLY is done for. Connect the lower highs until it breaks below 17. It's not at the back end of its move yet. If it breaks below 17, then it's at its backside of the move. But lately, this has been likened to bounce off of 1850 and popping up to 20. So this is getting really tight right now. And if this can break above 20, most definitely look for this thing to test 25 and the high it made up here at 29. So SOLY going into Monday is going to be on high watch for me. Unless the company comes out with a public offering or something that just kills the stock. Also have, there's a lot I have. I think RUHN is still on watch for me for the break above 4 and holding above 4. It's a recently newer IPO. All these IPOs have just been on fire. SAIL for a potential gap fill from $27.40 to $20. If this can get above 20, look for this thing for a potential gap fill. ZYNE had a nice pullback from the 16 level all the way down to 11.50. So this is likened to get a good bounce, making higher lows currently. COTY on a watch for me. I'm on this for a good bounce. Maybe here at $12 up to 13. I'm liking how this is pulling back. And just like a rubber band, when a stock pulls back, it's causing tension and tension and tension. And then when it finally has a green day, look for it to rip to the upside. So this $12 level has to hold on COTY. If it breaks below COTY, could be like watching a falling knife. But we also have the 50-day and the 300-day moving average right there for some sort of support. So COTY is definitely on watch for me too. BCYC, a newer IPO. It's only been open for 6 days. the range on this is pretty good, from 1375 all the way down to 1075. If any type of momentum could come into this and push it on up, this thing could go crazy. I think the float on BCYC is around 13 million. So it's not really too big, it's not too small. It's got a good size float on it. KPTI, that big death candle right here. Top of that is $10. This is currently at 550s. So this has room to run if it can break to the upside. If it can get above 650, I'm definitely going to be keeping this on watch. I'm liking how it's having like a bull flag pullback here on the daily. From $5, this might be a good play up to 650. CNDT, a potential gap fill here from 13 if it can get above $10. I love adding stocks to my watch list that have a gap to fill. I love, always have to keep those on a back burner. It could be a week, weeks, or a couple months before this starts to come back on up and fills the gap. But the way I look at it, this gap right here, it's an error in the chart. And a lot of stocks love to fill the gap to the upside and the downside. TAIT, this thing is crazy. This thing ramped from $2 all the way up to $7.50 and crashed right back down to $2. This is pretty much a pump and dump stock right here. You see a lot of pump and dumps have the same pattern of this right here. So I just added TAIT to my list just to watch it and see what it does. PHAS, again, a recently newer IPO, had this big run up here from 270s all the way up to 16, almost $17. Consolidated right here for the longest time, broke below it, sold off, and you see how it made like this rounding bottom right here at 950s all the way up to 1150. So I'm just keeping an eye on PHAS to see what it does. Maybe it could come back up and test this 1350 level again. Who knows? RBZ, even though it's still selling off, I just have to keep this on watch still, because this stock loves to run whenever it gets momentum. BPTH still selling off slowly but surely, but again, have to keep BPTH on watch because this just is an epic stock that exploded from $2 all the way up to $73. PRPO looks like it's starting to fall to the downside, but you could see I put a trend line on this connecting the higher lows, and it recently just broke below that trend line. So $6 is going to be resistance for it. It's bouncing right now off 550. This is looking bearish, but it was just something I was liking the chart pattern on this. This was almost forming like a big wedge, and it's looking like it's breaking to the downside. VLRX still on high watch. ABIO, this is an interesting one. Look at this thing. Another pump and dump stock. When it ran from $5 all the way up to $20, pulled back all the way to a mental $10, bounced from 10 all the way back up to 18, and then just sold all the way back down. That's just an awesome looking chart right there. Look at this. Looking at this, you could see there's no volume right here, and then look at all that volume come in on it, and it just exploded from 550 all the way up to 20, pulled back all the way down to $10, a mental level. Look at that. From $10, formed that rounding bottom, right back up to the old resistance right there of $16. Pulled back again, another rounding bottom, spiked right back up to resistance, consolidated, popped through that resistance real fast, came back down, and then just from there, just sold off nice and slow all the way down. So if somebody was short this, that's a nice move to the short side from 1750 all the way down to 550. That's a $12 move, and it took a month to do that move. A $12 move, you know, 1,000 shares, that's $12,000 in a month. Most people got to work a couple months to make that. RWLK still on watch for me. I'm liking how this is pulling back the past 2 days down to this 350 level. It could get another bounce up to this $4 level. I'm liking this. OTLK still on watch again. And this is the gap fill that I was talking about. When you have a, let me make this bigger. This could be another playbook play. You see how you have this gap down right there? Always add the stock to your watch list when you have a big gap down, because it could be days, weeks, or a couple months later for the stock to come back up and fill the gap. And look at from April all the way to mid-May. This thing just kept selling off and selling off and selling off, and then all it took was for them to come out with earnings. And then up she went, all the way back up, and look at where it found resistance, right at the top of that gap. From under $1 up to $3.25. Pulled back to $2, a mental area, and a great bounce from 2 up to 3. OTLK, this is an awesome chart. Take a picture, take a Snapchat or a screen capture of OTLK and write down, you know, your gap fill, and then the stock came back up and filled the gap. That's a playbook play, 100% right there. This is how you make money in the markets. You look for patterns. APEN. I'm just keeping this on watch for anything crazy. I think it's a low float stock. I think there was recently big insider buying on APEN. I'm just keeping an eye on it. If it can break above $4, this thing could do something crazy. This is a very volatile stock. And then WKHS, this is the stock that President Trump tweeted about when GM was talking about electric cars and the company doing the electric cars. This was a true penny stock, going from 75 cents up to $3.25. And it's been pulling back and hanging out in this area from $1.40 up to $1.75. If this can get back and above $2, this is in play. ECOR has just been getting annihilated from $6.50 all the way down to $1.50. Look at all these red candles right here. So I have ECOR on watch just for my rubber band play if it does something crazy. If this, you gotta look at it as a rubber band. All this tension going down and down and down and down and down. All it needs is that one green day for this to snap right back up to the upside. So ECOR is on watch for me for anything crazy. And the last one, ELTK, the one that everybody went crazy for last week, going from $1.50 all the way up to a high of almost $12 on earnings. Massive, massive move. And you can see it had two moves on it. One here from $1.50 all the way up to $3.25. Came right back down to where it started, and then a big gap up, and then off she went. Big, big move on this thing. $7 has to hold on ELTK. If $7 breaks, we're at the backside of the move. So ELTK, SOLY on watch next week. It's going to be an interesting week next week. I'm bearish on the overall market. Momentum's in small cap stocks right now. Hopefully it carries over into June. And that's another thing to keep in mind. We're entering summer months. Summer months for the market, it tends to slow down as the big money. You got to think all these rich people and the money that moves the markets, they all take summers off. They go to their summer homes, they go on vacations, they spend times with their family. That's why every summer we'll see the market slow down, because the big money's not in the markets. So it's key to just take a step back, lower your size, don't go high risk, balls to the wall during summer. Big moves can still happen, but you gotta be cautious. But this is a pretty long live stream. We've been going for almost 50 minutes now. But we went over my weekly watch list, all the indexes, all the sectors. Keep an eye, I'm telling you guys, on the TVIX and UVXY and the fear gauge, the VIX. I think the markets are really going to sell off probably next week. I'm bearish on the overall market. But hopefully you guys are all having a great weekend. If you're new to the channel, make sure you guys hit that subscribe button. And prepare for the upcoming week. That's what it's all about. But alright guys, until next time, have that patience, have that discipline, and study, study, study. Later everyone.